Hello, everyone. Welcome. This is the Fireside Fundraising panel, now taking place at the main stage. I'm so excited to see everyone back in person this year, so welcome to day one of the Sharjah Entrepreneurship Festival 2021. I'm excited to be joined today by a panelist of entrepreneurs, investors, and ecosystem enablers sharing tips and tricks on how to raise capital in the region. I'm excited to introduce Roberto Croci. Testing? Okay. Excited to introduce Roberto Croci, Managing Director of Microsoft for Startups in the Middle East and Africa region. And I will turn it over to him to introduce the rest of the panelists. Roberto.
Thank you, Riley. Thank you for having us today. Thank you to Sharjah as well for organizing the Entrepreneurship Festival. We have a great panelists with us today, so allow me first to introduce them one by one. So I will start with Walid Mansour. Walid is a venture partner and investor at MEVP. Just a quick round of applause as well for our panelists. Then we have Loulou Khazen. She's angel investors, founder of Nabbesh, but also the inspiring mind behind the Conversations with Loulou, the podcast. Loulou. And last but not least, we have Omar Alsharif, who is co-founder of Verity. So instead of myself reading a little bit of their bios, I think we can ask just an initial questions to each one of you about what led you into the world of startup investing and entrepreneurship. So we'll just respect the same order and tell us a little bit more about what you're doing and your story.
Thank you, Roberto. I started in this domain around the year 2005, 2006 here in the UAE, and I kind of fell into it, got the bug. I started on the government policy side, then moved to venture capital and spent most of my career in VC, covering, as a VC, covering the whole spectrum from pre-seed to IPO. And focusing on the region, and it's been a fascinating journey since then.
Amazing, thank you, Walid. So you are the guy that people need to convince to get the money from, right? So you're the investor.
Not me.
Not you directly.
The company as a VC is, and this is, people misunderstand that there's a lot of people involved in it, decision making. Investment committees and boards and stuff. So, but there is always a great story to lead with and a great pitch to lead with, and obviously some chemistry to build with your future partners. That's very important.
Amazing. Thank you, Walid. Loulou, over to you. You have both the hats of angel investors but also founder, right? So tell us more about your story.
So for me, I've been in Dubai since 2003. I moved here. I worked in the corporate world. And then one day, in the end of 2008, the financial crisis happened, the global financial crisis, and I lost my job. And that was the first time I thought about entrepreneurship as a path, and I thought, I wanted to create my own job versus waiting for someone to give me a job. And since the beginning of 2009, I have been working in the world of startups. First, I worked with an advisory firm that worked on advising startups and entrepreneurs, and then I founded my own, Nabbesh.com. I founded it in 2012 and grew the business and worked on it until last year, until 2020, where it was sold to Urid, which is a regional player and also in the freelance space. And since then, I have been doing angel investing because I think it's the best way to be a proxy entrepreneur without really taking on all the risks. So my risk is typically some cash, but always good to work and meet great entrepreneurs and learn from them and see what they're building at a very, very early stage. So that's what I've been doing for the past 3 years now, and along with the podcast.
Thank you, Loulou. Omar, over to you.
Thank you. So I started my career basically with entrepreneurship in 2010, back in Jordan with one of the first accelerators. It was called Oasis 500, and then moved my career with a couple of enablers such as Endeavor and so on, and then moved to the UAE, worked with a couple of corporates on setting their startup programs, Etisalat, also Emirates, and then moved to WAMDA, where I worked with them on their corporate and government accounts. And then in COVID, decided basically that it's time for me to start my own startup. I met with two great co-founders that are sitting over there, and we started Verity.
Amazing. Thank you so much, Omar. So let's start maybe from this point of view. So a lot of founders here go through a common mistake, which is trying to raise too much funds too early. And that triggers the question about when is the good time to start raising for fund, right? So what triggers a founder, a startup to start raising the fund, and how long a founder should be bootstrapping? Maybe I will start with you, Walid.
Yeah, I used to think differently in the past, but now I changed my mind. You always fundraise when you have cash. You never fundraise when you run out of money. Okay. 2, you always take every money you can put your hands on the table. Just take it all. 3, dilution is not important, because at the end of the day, cash is oxygen, and if you're going on a scuba diving trip, you always want more oxygen and not less oxygen. So there's no, what applies to you applies to a company. Now, the pitfall of that strategy is that if you've never seen too much cash in your life, are poor in managing people, are poor in managing cash, then obviously chances are you're gonna do mistakes, and there's gonna be, so it's important to also be someone who can handle big amounts, who's not gonna go on do things that should not be done just because you have more oxygen in the tank. I've seen this happen a lot of time. What was the second part of the question? Sorry.
For how long a founder should be bootstrapping and
Again, and it was something that also I changed my mind about. I'm not a big fan of bootstrapping outside of very limited cases. So in the beginning, when you're trying to build a product and you want to do your early private betas or tests, then yes, you can bootstrap. While you're, certain instances where you need to just take a breath and reassess certain strategies, people, culture, etc. It's okay. But bootstrapping as a strategy, I'm personally not a big fan of. I don't think it's a healthy strategy to follow. I think it's just, it goes back to this idea of oxygen. If it's not cash, it's time, and it's time to market, and things move very fast. So it's important to go at it and not bootstrap just because you feel like it.
Amazing. Thank you, Walid. Loulou, over to you. I like the analogy that Walid put forward with the oxygen, right? So, but also the pitfalls of that strategy. In your stage of investment, how are you looking at traction? Sometimes we hear in this ecosystem in the region, from startups saying, "Oh, that investor didn't see it with me because I don't have traction yet." So, is traction required? If yes, how much traction? Tell us more about how you see this.
So it happened to me, by the way, on the traction side when I was an entrepreneur, so I had to deal with that as well. Look, I think just to comment on what Walid said, I fully agree with him. Having been an entrepreneur myself, and when I was fundraising back in 2013, 2014, obviously times were completely different and cash wasn't readily available. So back then, you weren't able to raise a lot of cash anyway in the early days. But I think now the funds are very much available. And I think if terms are favorable, then you should definitely take as much cash as you can raise. So if I had to do it again as a startup, I would definitely do that. And as Walid said, dilution is, it's part of the story anyway, and it's going to happen. So, but obviously make sure that the terms are favorable and you're not being too diluted. So I just wanted to comment on that because I've been through that experience myself, and I know how challenging it is to run out of cash and be running around trying to pay salaries, trying to raise funds when you're in distress, and it's not a good situation that you want to be in. And it's happened to me, so lesson learned. On my end now as an angel investor, so obviously as angels we typically come at a very early stage. So usually there is traction, but there isn't a lot of traction. So usually we invest in companies that might have had a couple of months of traction, and it's typically at MVP stage. Most likely it's very early stages of the product development. So obviously if there is revenue, then that's a plus. I think most of the companies we invest in have revenue, but not obviously profits. So, but yeah, traction is important as long as you're looking at the right metrics. So obviously, what are you growing, and is it important to your business? So is it paid subscribers, or is it free users? And it makes a very big difference. But yes, there should be some level of traction.
Amazing. Thank you, Loulou. And Omar, over to you. You recently have your story with Verity, right? So you have been through recently raising a pre-seed investment. So from your perspective, what founders should try to achieve or implement before seeking an investment?
So it's all a game of trust between founders and investors, right? So you need to establish that trust. And for someone to invest in you, they would need to actually trust that they are doing the right decision. So you want to validate that decision basically, either by some of them ask for traction, others would want to have a team basically that is strong enough, as Walid has said, to not make all the mistakes basically and can deal with such an investment basically and get to the milestones that they were promising. From our side, basically, we are new at it, so basically it's a pre-seed round, so we closed 800,000, and it was an interesting journey basically, because each investor had a different metrics on how they judge you or how they want to make their investments. So as Loulou has said, it's when there are favorable terms, definitely go in for it and take the money, because it would help you to focus on the product, help you in focusing and getting to the market earlier, rather than just focusing on the how much did I spend today and how much money do I have in my pocket, basically.
Thank you, Omar. So we covered a bit the when is good to start raising or thinking about raising funds. What about the from whom, right? So we have reports that are saying in the region we see some gaps when it comes to early stage investment, and probably the audience is geared towards more, is curious as well about what's here in this ecosystem about early stage investment. What's your take on that? What's your point of view, your experience?
Sure, I agree with that. I agree there's a gap on the early stage side, especially pre-seed, seed. There's still a big opportunity there. There's not enough, although the number of VCs and investors has significantly shot up through the skies, but not enough to cover the demand. A lot of the VCs look for traction, product market fit, etc. Not enough are looking at the earlier stage. I agree with that. That's a very important gap to fill. When is the good time to raise and from whom? Really, there's all type of investors out there. There's angel investors who are ready to be the first check in any company when you have the ideas out, and those take the biggest risk but have the biggest reward, hopefully. And then the more you go up the chain, you have VCs and investors who look for financials and numbers and traction and that kind of stuff. And every stage has its own champion. So, and every stage has its own checklist. So if you're looking at pre-seed, seed, then focus on the team and the potential, and what's eventually the new disruption or the innovation that you're bringing. How big is the market? How realistic is success given that team, given that product? Then Series A, Series B, it's about product market fit, operational data, financial data, and then the way you go up to the IPO or exits, or it really becomes heavily skewed towards financials and company culture and ability to scale, convince that let's say you've dominated a market or two, then are you going to be able to sell a bigger expansion story? That's how I see the cycle myself.
Awesome, thank you, Walid. And Loulou and Omar, you both have the angel investing or the investing side within you, right? But also the entrepreneur angle. What are one or two things top of mind when we are saying there is this gap in the ecosystem, right? So there is a lack of early stage investment. What do you wish needs to happen in the ecosystem, or what are one or two things that you think should happen in order to reduce or to fill that gap? We'll start with Loulou or Omar, whoever wants to take it first.
So I think building networks is very important. I've been in this country for nearly 20 years, and for 20 years I've tried to meet as many people as possible and build a network. I think if you are thinking about starting a business, definitely tap into your network. I know a lot of people actually doing angel investing, but maybe not in an organized way. I know a lot of people in corporate positions, in director C-level positions that might write a $20,000 or $50,000 checks, and these are the people I've aggregated within a syndicate, and that's how we invest. So maybe there isn't a lot of visibility on these angel groups beyond maybe the established ones like Dubai Angel Investors or some of the others, but I don't know. I mean, I think there is money, again, for people who have invested time in building a network and cultivating a network for years. Also, I think the accelerators and the incubators are very interesting. So back in 2012, there weren't any. And now you have so many. In fact, they're going to throw money at you. Or they're giving you subsidies, they're giving you office, they're giving you a lot of support. All of this is something that we didn't have before. So I think there's definitely a point of taking advantage of that and tap into your network. Like one of the companies we invested in, they had tapped into their MBA network, and they ended up investing from people from all over the world who are like colleagues of them in MBA. So I think there's always a way to find that initial $50,000, $100,000 check.
Amazing. Omar, any other considerations?
Exactly what she wanted to say, but I would add to it basically one thing. So talk to anyone who would listen. So get all the perspectives. Those people would actually become your network and will also give you other perspectives on how to build your company, who should come in as investors, and so on. So just don't hide all the information about your startups. Go and talk about it publicly and make sure that you can tap into all the advisors that you can talk to. Those would help you immensely in actually building that network and also connecting you to the right investors.
Thank you. If I listen to what Y Combinator, to take as an example, they are saying is the way to look at it is when making an investment is the 3 Ps, they say, right? So people, product, and profit, and they also say in this order. So in your experience, what are some of the most important factors that you evaluate when you say this is a great team, this is an A team, this is a kick-ass team, and this is a great business? Walid.
Sure. On the people side, look, one thing I learned is that people change. So sometimes you have an assessment early on, and then people can overachieve or underachieve and surpass themselves, or people by nature change. So it's your ability to read people and to be, trying to project them how they're going to be together under stress, are they going to be able to scale? Are they going to be able to solve a lot of the issues? It's not easy. It's hard. I'm personally learning every day. And I'm learning from both sides, not just as an investor, but also with the companies as involved in the build-up of companies. It's a two-sided discussion. So people is the hardest, in my opinion, variable. Now businesses, some people look for profitability quickly. Some people look for value on the long run. I don't think there's an answer on what is the most important criteria, but everyone is in obviously for the money. So if you're selling a small story, that's not going to be exciting. Maybe people are going to get excited because it's an impact story or it has other tangibles. But if you want to selling a growth story, then you better be believable. Second, there are opportunities, there's flavors, there are industries today, in the Middle East, that are completely untapped. Like really, no one is touching them for a variety of reasons that I'm, so I'm thinking about prop tech or education or supply chain or, there's a lot of examples where we can spend hours wondering why there hasn't been enough investments in digitization, and it could be the size of there's no conviction in the size of from some, in the size of the opportunity. Could be, there hasn't, sometimes there's a herd mentality. People like to follow certain themes because it's what others are doing. I don't have an answer, but really I go back to this, and this is something I learned myself over time. People change. That's the only constant, because business opportunities don't really change. The opportunity is there, somebody's gonna grab it. But if you're with a team or that team and you see them really go through the stages I named, so pre-seed, seed, A, B, C, if you see them becoming a massive company, then you should go for the deal if the business opportunity suits your strategy. If not, try to help them get there. And if you're really bad at treating people, then you're going to be stuck with some bad investments.
Thank you, Walid. I like this concept of things change, right? Because most of the people tend to, hey, give me a framework, and they want to have that framework and they want to stick to it, right? But there should be some sort of dynamics around it and flexibility around interpreting things, right? So
it's very easy to tell somebody, look, it worked somewhere else, it's gonna work here. And I think from we're all humans, we always like that. We like the idea that, it works somewhere. So, and you can fall into a trap here by assuming that things are gonna work out just because somebody else has done it. I think in the early stage it's people, at the later stage it's culture. If you have a company that has a culture where the bad people, even if they're owners, bad at the task, not bad as persons, bad at the task, have the humility to step down and let others grow and take their place, then you have a great culture that's adaptive, that's changing. At the early stage, but as an investor, it's an ability to kind of read people that is important. That takes time, and nobody can get it 100% right. It's just a learning journey.
Amazing. Loulou, what's in your experience as well, when you look at the great team and the great business, what are you looking at?
So again, as angel investors, because we're very early in the process, it's mostly team. I mean, of course, what they're building is important and the space that they're in. But I think the most important factor is the chemistry or if ourselves and the founders, we see that we can work together. And the way we've structured our angel syndicate is that there are people from different industries. So we have people in tech, in media, in payments, and in different industries. So what we try to do is, we want to add value. So we also want to work with people that, that would want to take advice or need some support, not beyond just cash. So I think for us, team is very important. And of course, we need to be excited about the business. Because it's your money. We don't have a mandate. We're not investing someone else's money. So ultimately, you want to invest in something that you think is going to be interesting, and there's going to be some sort of learning experience for us as well as investors, as well as the founders.
Amazing. And Omar, one question. We always see the investors, right? They do a sort of a due diligence on the startups, the founders that they might invest into. What about the opposite? What about founders doing a sort of, like we sometimes do reverse pitching sessions, right? So yeah. What about a reverse due diligence? So you as a founder, what traits or what important factors would you look into an investor? Who would you want to get money from and why?
So the first thing I would say is I would encourage startup founders to actually do their due diligence on investors. I see a lot of pitches basically that happen where startups only pitch and they don't ask investors critical questions basically. You need to make sure that you're aligned with the investor and make sure that this investor is the right investor for you. So things like how much are they investing, who are the success stories that they have, in terms of exposure. So if they give you like 100K, would they be able to actually do follow-on on that or not? Ask other startups in their portfolio. You would be amazed at big investors basically where even their portfolio companies are not satisfied with the investor themselves. So make sure that you do your due diligence, ask about those investors, and ask them the questions basically that would make you relieved to have this person on board, because it's a partnership at the end of the day, right? You'll see this person, you want this person to advise you, and you want to make sure that this person will open doors to you. So make sure that you are picking the right investors on board that would allow you to, one, have access to their networks, to advise you on the business itself from their experiences, and also have enough runway within their funds basically to actually invest and reinvest in you. Because it's not great if you're getting 100K today and then the investor would tell you, okay, I've run out of money, so we cannot reinvest in you. So those would be my points basically.
Yeah, those are amazing points. Thank you, Omar. Let's try to have, to close the panel, and sort of an outlook towards the future. We have seen the local or regional investment ecosystem evolving, right, over time. And we know it's a process. We know it's going to get better and better. And there has been signals and evidence of that over time in the recent years. And we are optimistic around the future as well, right? So, but what are some of the key trends that you see? There is more capital pulled into the ecosystem here, also from outside, from international capital markets. We see a trend in that. What else? Where do you think the ecosystem is evolving? And I would have more questions to that in terms of how the relationship between LPs and GPs is going to change or transform or evolve, or what about impact investing, that we start seeing some signals of more, and there are some venture capital saying why we should differentiate that from what we are already doing, because we are already looking at investing in startups that have impact, and others that are saying, no, but it's different, right? So we need to show that it's not only about profitability, but also impact, so it has to be dedicated. Where do you see the trends? Where do you see the future of the ecosystem, investment ecosystem evolving?
So yeah, that's 3 questions on one. So on the trend side, obviously things are getting better than they used to, but we're still far from where we should be. I mean, let's be very realistic. At least on the digital side, digital economy is still small. Digital investments in that economy are still small by the standards of how big the economies in the MENA region are. And the participant, the players, are not either, have done it for a very long time. So also, to a certain extent, all of this is new. Now, is it going to get better? Of course, it's bound to be. There's an acceleration in investing, in exiting, in learning. There's a new generation of people who have been trained by amazing entrepreneurs and amazing companies and are spinning off and creating that trend. The challenge is every country is very different. The fragmentation of the region it can be cracked. It's not easy, but it's not neither, given. So the fragmentation, solving for fragmentation is going to be key. And I look forward to seeing more kind of integration between countries on the technology investing, and it's already happening because people travel and meet, etc., but not necessarily on the countries side. Second, on relationship between the whole VC, I think having too much money is just not just in VC. There's, generally speaking, the results of the quantitative easing strategies followed by the US, Europe, etc. We have a big supply of money coming in, which means even we see it across asset classes, which means that equity now is expensive, cash is cheap. And we're really learning how to live in that environment, whether as investors or entrepreneurs or, really this is a bit new for us, especially in this part of the world. So where is this going to go? It has impacts on inflation, of valuations, etc. I don't know. Again, I suspect that if the money keeps pouring in the system the way it is, then we'll continue on this trend. Surely it's creating a lot of wealth for people. It's creating mobility, it's creating job opportunities. The downside, I'm not sure about returns. We'll see whether the vintage of these years are going to be exciting or not. Time will tell. And on impact investing, I see a lot of interest in that. I think it's also one of the areas that the Middle East is still new to. We need more players, more participants, more money, and more clear strategies on what impact investing means. Because I think private investors, the best thing they do is by investing is they're creating jobs, they're creating mobility. I admire angel investors. I do some angel investing myself. Every time I do it, I don't necessarily think that I'm going to see the money back, but I feel good that somehow it's supporting someone in their journey, in their, in their wealth creation journey, in their dream journey, and it's support. And the money is going to teams, to people. It's not, thrown away on a fancy car or something. I feel personally good. So I think investing has an impact for sure, and I invite a lot of you to try it. It's fun, it creates relationships, networks, you feel good about yourself. Some people don't give to charity, they just invest, think of it as charity. I'm all for it.
Amazing, thank you. Loulou, how do you see your thoughts about the trends and the evolution of the investment ecosystem in the region?
Okay, I think Walid, spoke about it extensively, but I think the only thing I'll add is that there's a lot of excitement about people coming out of successful startups and existing startups that are venturing out and building their own. And I think when I go out and meet people today, you see some really interesting pitches. You meet some great founders who are maybe second-time founders or people who have worked in great high-growth companies. And I think the conversation overall is much more interesting today than it was 8 years ago. There's definitely more knowledge. When I started my business, I think we were all learning. I was learning, the investors were learning. I think there weren't a lot of big success stories in the region so that we can learn from. I feel that this has changed. I feel that there is a lot of more knowledge now available. So it definitely makes much more interesting conversations with founders today. So I think this is the trend that we're going to see is more people coming out and launching their own startups.
Thank you, Loulou. And Omar, one question about the role of ecosystem players, right? So we are in Sharjah. We have beautiful experiences here with Shira, for example, as an accelerator. They launched the venture builder with S3. We have the Sharjah Research Technology Innovation Park. What is the role that these players have to play to help founder startups, either to go for the next round or to accelerate them or to build new ventures?
So it would be great for those accelerators to actually, one, validate the ideas and validate the products of those individuals, give them access to investors, and also give them access to the market, basically, and help them with resources. So me and Loulou were talking probably a year and a half ago about how startups face, in their early stages, the lack of talent. So they don't have a lot of people that they can hire, and they not necessarily have money, basically, to hire people internally. So they rely on a lot of freelancers. So that would be one of the things that I would focus on, is how can you give them access to experts in fields like marketing, in fields like PR, and so on, and allow that, in addition to the investment and so on. The unfortunate thing is there's so many, right? So there's so many to choose from, and not a lot of them are actually fulfilling their promises. So a lot of startups are fearing actually getting involved in those programs. So you want to make sure that you vet this program prior to getting into it, see what their results are, and see how their methodology have helped others, and then get involved in such programs, rather than just getting involved in them just to put those logos as people that have supported you in your journey.
Awesome. Thank you, Omar. One just final piece of advice from each of you. We might have founder startups in the audience that are trying to raise their next round. So what's your piece of advice that you would give to them to close the session with? I would respect the same order. So, Walid.
Just take it easy.
Awesome. Take it easy. Loulou?
I think time kills deals. So when you have momentum and you're talking to multiple investors, if you can close really quickly. I've seen many deals get killed just because time passed and people forget about you. And also do your due diligence on the investors. Find out when their funds when they launch their funds, how much has been spent, how much money do they still have, so that you don't waste your time. Because I think a lot of investors might just sit with you, get some information, but maybe they don't even have the money to invest anyway. So I think do your due diligence.
Thank you, Loulou. Omar?
I would say listen. So listen to everyone in the ecosystem because we as startup founders, we're very stubborn about the ideas that we want to do and the product and how it is. So I would say listen to everyone, not necessarily take every advice that is basically given to you, but at the end of the day, just listen and see where those people are coming from and then base your decisions according to what you've heard.
Yeah, actively listening, right?
Yeah.
So yeah, thank you, Omar. I'm just checking with Riley if there is time to take one final question from the audience. If not, because I know we are late, we started a bit later. So if not, I cannot see if anyone has any question. If not, wrapping up the session and starting, sharing a message of gratitude and thanking Shira and Sharjah for hosting this great entrepreneurship festival. Thank you, Walid, Loulou, Omar, for sharing your precious insights and experience. I think the audience really appreciate that. So thank you everyone for hosting us today. And all the team that worked with Riley and the team behind to set up all of the festival. So thank you everyone.